This is the Daily Market Comment by Rafi Boyadjian and Maria Pachurdes. Thanks for joining us at XM.com. The market turmoil sparked by last week's round of central bank rate hikes receded further on Tuesday as worries about a recession were put on hold while investors weighed the risks ahead of some key data and a congressional testimony by Fed Chair Jerome Powell. European stocks were headed for a second day of gains, and Asian markets were mostly higher, with Wall Street futures also pointing to a solid open when U.S. traders returned from their long holiday weekend. Nothing much has changed since last week surrounding expectations about central bank tightening or signs that inflationary pressures may be moderating. The pause in the bond rout is also likely aiding sentiment as yields settle below the recent highs. Powell will be speaking before both chambers of Congress on Wednesday and Thursday, and may signal that more aggressive rate increases will be needed to combat stubbornly high inflation. Crucial PMI data for June, as well as inflation numbers for the UK, Canada, and Japan, are due this week too. Hence, this may just be the calm before the next storm. In FX markets, the US dollar backed further away from last week's two-decade peak against a basket of currencies. Fresh lows for the yen seem more likely than not after the Bank of Japan refused to change its ultra-accommodative stance at its meeting last Friday. In contrast, the European Central Bank is getting ready to lift rates, and a bigger increase is possible in September if there are more upside surprises in inflation. The euro was last trading up almost 0.5%. Some reassurances by President Christine Lagarde on Monday on the ECB's determination to prevent fragmentation in the Eurozone bond market are also likely adding to the euro's positive momentum. The pound was up too, drawing support from relatively hawkish remarks by the Bank of England's Catherine Mann, with investors sensing some inklings of a hawkish shift by the BoE. The Australian dollar was another strong gainer, though it lagged the Canadian dollar, which was today's biggest winner. The Aussie, meanwhile, along with the Kiwi, was benefiting from the improved risk sentiment, but its advances were capped by RBA Governor Philip Lowe, who played down the prospect of rate rises bigger than 50 basis points in a speech earlier today. This is today's Daily Market Comment. Thanks for joining us at XM.com.